JJ the CPA here. Hope you're doing well. So this is a part 2 to a couple of videos that I've done related to getting the 100% deduction for SUVs and trucks, those vehicles that are over 6,000 pounds GVWR. There seems to be some common questions I've been answering in the comments, so thought I would put this video together to now go through some of those things. So if you haven't seen that video, check it out. It's a good kind of run through ABCs related to that. But for those that are self-employed, meaning you're filing a Schedule C, you're not filing a separate tax return, you don't need to worry about titling the vehicle in your business, because with Schedule C, you're just deducting the assets that you buy as well as the expenses, whether it's in the personal or the business name. Now, for those that are interested in doing some kind of financing of your vehicle, that won't affect your deduction, because whatever it is that you purchase the vehicle for, that is your deduction. So even if you made a down payment, you finance some or all of it, even if you traded in a vehicle and it reduced down what it is that you need to pay for the vehicle, that doesn't have any effect on it, because it just comes down to what is the purchase price. When you're now looking at being able to deduct it with your business that you file a separate tax return with, meaning an S Corp, a partnership, or a C Corp, then it does need to be titled in your business name, and the business then needs to pay all of those expenses, including the interest as well as any of the upkeep, gas, etc. That way you're getting that full deduction at the business level. When you now look at if you got this vehicle in 2023, because the 100% deduction ends 12/31/22, so when you get to next year, you get to deduct up to 80% in 23. Well, what happens with the other 20% that you didn't get to deduct? Well, you get to still deduct it. It would just be over 5 years. Also, there's been discussion of, well, if I take Section 179, then can I take bonus depreciation on top of that? Yes, you can do that. Some have said, well, you have to take Section 179 before you can do bonus. That's actually not true. It's an option to do it, but it's not a requirement. With my clients, we simply just do bonus depreciation because it doesn't have the same recapture as 179. So if you use code section 179 and your business usage drops below 50% in the future, then you're going to have to give back or recapture any of the depreciation that you took under Section 179 previously. That is not the case with bonus depreciation. Also, questions on if you got the vehicle and you got it here near the end of the year, and when you're now determining what your business usage is, what if you only have a few days that you actually own that vehicle, you're placing it in service as in driving it? Is it really that you're determining those business miles just based on the rest of the year? And the answer is yes. Also, many have asked, well, if I take the deduction for the vehicle costs this year, what do I do next year? Well, next year you would continue to take the actual costs, which would be the interest portion of the payments, the gas, the insurance, the upkeep, and the maintenance. But you do have the option that in the following year, you could use the mileage method. And I also cover that in this other video I'm referencing. But here's the other thing to note. Some have said, well, what if in the first year I take the mileage deduction, then can I get the bonus big time deduction in the following year? The answer is no to that, because in the year in which you buy the vehicle and then place it in service, which just means that you're driving it and declaring it as a business vehicle, only in the first year are you able to take that big upfront deduction, whether it's Section 179 or 168, the bonus depreciation. So in the event that you in the first year took the mileage rate, well, in the second year, if you did take actual expenses as a deduction, then you would not get that big wallop of depreciation from only what's available in year one. And the depreciation that you would then take is, well, what's the depreciation that that vehicle will experience in the second year? So hopefully some of those things will help clear up, since there seems to be a lot of common questions around these things. If you would, I also have a link that would help you with a number of other things related to tax planning and saving taxes. I've got some seminars. I'm going to give you links to that as well. All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. All right, you have a great one.